Bitcoin on the BLX. Why the BLX? Because it allows us to see more history. You can look at Bitcoin on a regular chart, but it only lets you go back about 5-6 years or so. So the BLX will allow us to see back further in history. It's still Bitcoin, but keep in mind, it's a little bit delayed on price, as you're probably seeing in front of you. The BLX only updates on the closes, where Bitcoin's kind of the active one, right? So the BLX, we have two moving averages in front of us, the 100-week SMA and the 200-week SMA. So in this video, we're going to look at both of these, obviously. Then we're also going to look at the 100-week EMA and the 200-week EMA and show you the differences and how drastic they can be, and also why you might want to use both from time to time. So if you like the video today, give us a thumbs up. Follow us on Telegram if you want more content than what you see on YouTube. You want more help than that. We also have a private Telegram that's linked through Patreon. Glad to help you there, and we'll see you soon. So let's go ahead and proceed. So what do we notice? Well, let's look at our support line here. Previous drop back in from May all the way to July, right? Forming, many candles right in this area. Also, why do we hold there? Well, more likely because of all the buyer orders back in this area, January, right? So this is a key level. Not only this, but you have another potential touch point with the 100-week SMA, right? Just shy of 32K. Let's get an exact number. It is 31,655, as you see here in the blue here, okay? So that will be key level as we approach it. Now, do we go down to that level? I don't know yet. Remains to be seen. Do we go up first and then come back down, right? We're not here to try to predict the future. We're just here to relay the data that you see in front of you and try to help you best interpret it so you can make informed decisions of your own. So the 100-week SMA will be a key level. Make no mistake. So if we break that, history shows we tend to fall to this. Immediately, of course not. It'll probably take months to get down here. Months. It doesn't mean that we're going to go straight to it, okay? And in fact, I think the odds are we go up a bit before we come back down. And we could potentially go up and just, this could be the end, right? Nobody knows. This could be the bottom right here, right? Anybody that's saying definitively that this is certainly not the bottom, you need to be running away from those people. People with a deterministic mindset on anything, certainly in crypto or trading, is probably not doing so well themselves. People that you need to, professional traders, I don't care who you are, any professional trader looks at both the upside, the downside, the reasons for both at all times. Okay, plain and simple. So we do want to hold this as support. Otherwise, we will likely, the odds will improve of us going down to test this level. Now, currently, that's just shy of $20,000. You might say, wow, if we go into this, we're going to 20K. Pump the brakes, man. Not necessarily. Remember I said it could take months, right? This is the 200-week SMA. This will continue to trend up. Even though we're coming down, it is taking the previous 200 weeks, 200 of these candles into average. So this will continue to slowly move up here. So you can visualize with me that this will probably creep up, and depending on if and when we hit it, it could be 25K, 26K, 24K, right? We'll see as we progress into the future. We will see also if we end up holding this 100-week SMA, just like we did, this level, right? 30. There was no moving averages around here, but being the fact that we spent so much time forming a base here, and as well as here. And now we're at the moving average. I think this is going to be a pretty strong level in my opinion. So we will see once we get to it. So let's take another gander at what I think could potentially happen here. So let's get our scale up and let's see what Chase's opinion is, if you care. So I think the odds on, right, nobody knows what's going to happen. This is just my best guesstimate, right? So sometimes these are fun. Sometimes these, if you don't agree with it, you hate it. So I think that we tend to maybe just consolidate or come up a little bit and then come back down and then kind of maybe form this base, follow along this 100-week for a little bit more time, maybe going into Q2 even, right? Something like this, come back down, hold it. If we hold it, right, then we can start building back up again for the macro scale and go up. I doubt we're going to go up that fast, but nothing would surprise me anymore in Bitcoin. Now, this is my most likely scenario in my book. I don't think we're getting ready to just go back up forever, and I don't think we're getting ready to have a catastrophic downfall like a lot of people are calling for. I think if we're going to go down lower, we must go up a little bit first. I'm not saying we're going to get some amazing explosive move to the upside, but somewhere between 40-ish to 45-ish, right? These levels right here, these are the kind of the levels I'd be looking for a rally for, right? Because look at the base, right? Look at the base here. Look at the resistance and support, right? So I would say if we can somehow rally up to either this area, which would be kind of a more pitiful rally, right? This is kind of just more of a fake out than anything, or kind of resuming the downtrend, right? I would think a substantial nice rally would be at least up into this 46K area, coinciding with these kind of candles that we built weeks forming. So let's remove all of the garbage now, and so now hopefully you give a better idea of kind of what I'm thinking down the line. So let's go back and look at history at these levels. Again, once we broke the 100 week, we went to the 200 week, right? We tried to play around and hold with it back in here, so we'll see. Now initially, look at this area, right? After our 2019 summer bubble, we came down, pretty dramatic fashion, massive candle there, but we held support at that 100 week before moving back up, before coming back down, kind of holding it again, right? A lot of uncertainty in this area. If you were around back then, it was more confusing than now. Let's remove that again, and let's go look at the previous time. So the 2018 bear market. Now, there's a significant difference between what's going on here and what we're doing now. Look at just this downtrend here, right? Just basically nothing but down. No relief rallies at all, really. So look at this one, down and then way up, and then down, then way up, and then down, then up, right? These are big rallies. These are 40-50% plus rallies. We haven't had anything over 20%, not even close, right? Yeah. See this? So if we're going to go into a long bear market, we need to have bounces along the way. Long bear markets are not met with substantial initial downside. This leads to more of this kind of bear market, right? This was kind of bearish right in here, right? We're technically in a bear market right there, right? So if we want to repeat something like this, so far we're on scale, right? Come down here to your 100 week previous support, and then remove our lines. I'm gonna clean it up for you here. And then, grind along this 100 week, and then maybe we can slowly move back to the upside and, leave all the bears in the dust here. Okay. So that's certainly a possibility that we need to prepare for. So until we break the 100 week, I think we're safe. So looking for closes under the 100 week. But if we close under the 100 week, make no mistake, it will be significant, because although we don't have, the positive side, we only have a couple data points, right? Because the 200 week and the 100 week don't only go back to this area, right? So we didn't know what was going to happen all the way back in here. But historically speaking, history doesn't make it so that it's going to happen again. But, anytime we've broken and closed below the 100 week SMA, we've gone to the 200 week. Okay. So history, there's once, there's twice, 3 times, and you're out. So maybe we're out of it. Maybe we don't do that anymore. That's all it takes, right? Just get a rhyme and a reason and some baseball in there, and all is good. So, okay, now let's look at the difference between SMAs and EMAs, okay? So here's the EMA. There's your 100 week EMA. Let's go ahead and change the color so we don't confuse us here. There we go. Let's make it green, right? There you go. So the 100 week EMA in the green, 100 week SMA in the blue. See the differences? Right now we're at the 100 week EMA. Has that played a significant role in the past? Well, let's go look real quick. So look at that. We fell on the 2018 bear market to the EMA. Look at that. We held support on the EMA. So sometimes exponential you want to use. Sometimes SMAs you want to use. Really, it's more preference. But as you can see, I mean, just clear as day that sometimes EMAs present a reason to use them. Sometimes SMAs present a reason to use them. So there's the 100 week EMA in the green. Now let's go ahead and put on the 200 week EMA and see the difference. You can see how dramatically different EMAs and SMAs can be here. So hopefully without confusing you a whole lot, The 200-week EMA is in the red, which I've used before, often use, quite frequently. 200-week EMA is currently at 25K. Has that ever played a significant role? Well, so far, not there, right? We held kind of resistance right under it. Look at that. The 200-week EMA, right? Resistance right on it for weeks at a time, all the way down until we broke out of it, right? We held the 200-week SMA as support. We held the 200-week EMA as resistance. Maybe some helpfulness there. We'll have to see if we get down to these levels again, what we do. Let's go back and look some more. Well, now we're getting to, because they just kind of started out here, right? They're not going to be able to get that far separated. So exponential moving averages update and have more weight in the more current candles. That's why they move. It tends to be a little bit faster, as you can see here. But, given that they started here, we're not going to get a whole lot of separation or differences that matter. So really only one data point back in the 2018 bear market that really showed the significant difference in the EMAs versus the SMAs. So, hopefully this helps someone out there a little bit more than you knew 15 minutes ago. All right, so let's go take a look-see at the Crypto Fear and Greed Index, and we'll note that we're still in extreme fear. We've been down here for some time, just like we've been down here for some time, back in May, June, July. So we're still down there. So how much longer could we have? Your guess is as good as mine. Go ask your grandma. Quote of the day: we love life not because we are used to living, but because we are used to loving. So sweet. Friedrich Nietzsche. Cool dude. Car of the day. Foreshadowed it yesterday with the tiny horseshoe. The Bugatti EB110, one of the original Bugattis here. So now these are highly sought after collector's items. Millions of dollars. Good luck getting one. But what the glaring difference between the new ones and this one is the new Bugattis have like this massive, like 2 foot tall horseshoe versus this little baby guy right here. The baby horse, the baby Bugatti. So there's the rear. Yeah, they look a little dated, right? A little bit dated, but they should be. All right. Oh, I forgot to show my damn model. That's why we did it. Just got this one. Look at it. Still in pristine condition. Sometimes I can find these online that are just magically been locked away. So probably not going to open that one. All right. That's it on this one. End on meme of the day. Happy Friday. Hopefully you get both of these references. If not, I'm sorry.